What is going on YouTube? It's Sang and we are back with another one. And this drop, coming at you guys with an update on a couple of our plays that will make the double up. But before I kick things off, if you'd like to help out the channel by hitting that like button, because it keeps the show rolling. Alright guys, so that wraps up another week in these markets. Now we have hit major success this week. Tons of our plays are on fire, so your portfolio should be rocketing right now if you've been sticking to that blueprint. So what I want to do is put a few of these plays in the spotlight, cover them off, let you guys know what to expect. Now we can continue to hit success with these plays. Then I want to touch on one of our plays that will make the double up, so you guys are set and ready for next week in these markets. So as always guys, I've got a jam-packed one for you, so let's run the first one. So we're going to kick things off with the newest entrant to the portfolio. That's ticker symbol DAC, that's the nails. I've been saying to the family over the last 2 weeks, you want to get your seat on this one because they are going to take off. Now check that performance on the week. We're up just under 10%. I'm still holding the 20 shares. My return is over 10% in this one. So if you're in this play with me, you're already hitting success. Now the narrative here remains the same. These shipping rates are sky high and this play is just locking in multi-year agreements. That's why they're on the run right now and there's still room to climb. Now, you guys got to remember, this is what we call a cyclical play. So they're not always going to continue running. So at some point, this growth is going to slow down. But for now, they still have room to climb. Okay, as I say, this one is going to approach that triple digit mark. We are going to take profits on this play at some point in time. So I want you guys to just get ready for that. But as it stands right now, they haven't reached their peak. But as you guys know, I'm waiting for the pullback in this one. And I'm expecting them now to pull back to the low 70s, okay? So you guys who want to get onto this play, you want to wait for that pullback to the low 70s in and around the region of $73 or $74 to make entry on this play. Then you can get in and ride the wave up to the top with us. But this is just one I want to highlight for you guys. Alright guys, let's touch on ticker symbol WFC, that's Wells Fargo. Another strong performer on the week, this one's up over 11%. Now if you guys remember at the beginning of the week, I said make sure you get your position in this one. They've had a pullback in that price. And you guys know when quality plays drop in price, we don't fear that. As a matter of fact, we take full advantage of that and pounce at that cheaper price point. Now, a couple of banking plays have passed their recession stress test. So this just adds further fuel to the investment theses we have on this play. And we know as we go through economic reopening, business activity is going to increase. That demand for the financial services and products from the play will also increase. This one's set to continuous rise. As a matter of fact, check out that stock price with me. At $46 where they're trading right now, this one is pretty much at the low end of their historic trading pattern over the last couple of years, because usually this one trades in the mid to high 50s. Okay, so this is a play that has room to continue upwards, get back into the 50s and could get into the 60s. It's playing catch up with other plays in the market in the financial space that have broken through, made some wild all-time highs, like a Morgan Stanley, for example, like a Goldman Sachs. So there's still a lot of upside on this play. So this is one, if you don't have them in your portfolio, next week, what you want to do is you want to grab some Wells Fargo stock, add them to the portfolio. It's going to be another one of your winning plays. Another one of our rockets this week, that's ticker symbol RVLV, that's Revolve. This one's in touch and distance now of $70. You guys know I say this is one of my favorite reopening plays I've been telling you guys about on the daily over the last couple of weeks. Now this one is an e-commerce play focused at the millennials, so they're a facilitator of that transition back to normal life when we see more entertainment, more socials, things of that nature. So the market is starting to wake up and realize the potential of this one, and we haven't even yet hit their financial numbers because they're going to come in hot and that's going to give further fuel to that stock price. Now at $69, as a matter of fact, this one was over $70 today, and you guys know I say they're going to touch the mid 70s, no problem. Now, what you want to do, if you're not in this place, you want to wait for that pullback. Now, if you check out that 3-month stock price, we know this one can pull back on some extreme levels. When I actually put them on your radar, they drop from the high 50s down to the low 40s. Now, at that point, I said you want to snap the play up. I did. That's why I'm up over 40% in this place. So you want to get ready for the next pullback in this one. So entry on this one is around that $64 to $63 mark. Catch the pullback there, then you make entry on this play. Because as I say, they're ready to go through into the 70s and we haven't yet hit those strong financial Q2 numbers. And Q3 and Q4 is also going to come in with some serious heat as well. So you guys want to make sure that this is a play that you have in your portfolio. You want to ready for the run up. So I'm going to touch on ticker symbol ROKU. So we hit the 430 in this play today. This one's another one of our rocket plays, over 16% on the week. Now, tons of our portfolio plays are on fire right now. I just wanted to highlight a few of them, bring them to attention, let you guys know we're going to continue to hit success with these plays and where you can make entry. That being said, if you want to get on board on Roku, you want to catch them closer to that $400 mark. That's 405, 410 to make entry on the play. Now this one's armed with cash, and what they're going to do is continue to deploy that to continue scaling and growing their business. That's how they're going to take this one to a $600 play in the medium term. So I just want to give you guys a heads up. This is a play with a lot more room to climb. We're going to continue to hit success with yet another one of our plays. Alright, so on to our play that will double up. That's ticker symbol HITI. That's High Tide. Now they dropped news today. They're making another acquisition. Now what you guys got to realize is there's a lot of consolidation going on in the industry right now. That is large players growing by taking over small players. Now rest assured they're going to continue to do this as we move through the year, using that cash to get into different verticals, get into different locations to ultimately become one of the dominant players in the game. That's why this is one of my double up plays. Got that medium term price target on this one of $15. So that is within the next 6 months on this play. And for my investors, my holders in this one, there's a potential to triple your money thereafter. That's why I've got 1,100 shares in this one ready for the climb. Now, even though we've seen that 4% jump in that stock price, I want to let you guys know this is nothing compared to what this one will move when it's ready to do so. I'm going to give you guys a heads up. We've got earnings coming out next week, so the spotlight is going to be on the play, and I'm expecting them to come in hot on the day. So if you're rocking the channel, you know what time it is. I've got a question for you. I have 84 shares of Tesla. That's a very good amount, by the way. My average is 731. I'm a rookie at investing, just started 3 or 4 months ago. I want to know, can you tell me at what time I should start selling my Tesla shares to take profit? I heard it's usually 40% or 30. So when I get to 30 or 40%, should I sell 10 or 20 shares and take some profit? Alright, so let's get to it. Now, before we get into selling strategy, what you want to do if you have cash available and you have a diversified portfolio is you want to be dollar cost averaging down on Tesla, because your average entry price is up there, the current price is down here. So it gives you the opportunity to buy at a lower price point, and when Tesla rises, you'll make even more returns on the way back up. So in terms of selling strategy, first of all, you want to understand what type of investor you are, whether you're in it for the short term, the medium term, or the long term. Now, what you guys got to realize is in the stock market, you'll make money if you're a short or medium term player. You'll make wealth if you're an investor for the longer term, because these returns compound over time on growth plays that are going to be multi-year winners like a Tesla will be. So with Tesla, if you're in it for the long term, if you're looking to build wealth in the stock market, it's not about hitting a certain percentage point. It's not about hitting 30% or 40% or even 60 or 100% in the play. What it's about is ensuring the play is going to continue to grow over time. So we know Tesla is going to do well this year, next year. It's got a plan, okay? It's got a roadmap for success over the next couple of years as the EV industry continues to grow and build and evolve. So therefore, us investors, we have the opportunity to continue winning year after year after year after year in Tesla by just getting in good entry now and holding that. And if we want to invest on the way up, we can do so. Now that's different from if I give you guys a fast moving play and we say, okay, we're in this for a couple of weeks time and we're looking to net 10 to 15 or 30% returns. That's a different situation, okay? So you want to be identifying which plays are going to be your multi-year winners, which plays are going to be in it for the short or medium term. Like take a play like a Revolve, for example. For now, that is a shorter term play, okay? Because we need to see if management have the tools, the capacity, the capability to get this one being a multi-year winning play. We know this one's going to benefit off the back of economic reopening, but after reopening, are they going to be a winner, or are we going to see sales numbers and everything slow down? Okay, if they will slow down, then that stock price is either going to consolidate or going to come down. So at that point in time, we want to be ready to pull the trigger, get out of the play with our maximum results, whether it's our 75%, 100%, whatever we make by that time. So I just want to give you guys a little bit of guidance in terms of selling strategy and the mindset you need to have when you're playing the game in the stock market. Alright guys, so that wraps up for this one. If you've got any questions for me, leave them down below and I'll get back to you. I want to say I appreciate you guys. As we head into the weekend, you guys know I'm packing the heat, coming at you guys Saturday, Sunday with plays and what we should be doing and focusing on next week in these markets so we can continue to hit success. That being said, on your way out, do light up that comment section for me if you're new, join the movement, and I'll catch you in the next one.